All right, guys, if you are struggling with IFVGs, how to use them in your model, how to use them in day trading in general, and you take your IFVG and you just get slammed every single time, your stop seems like it's being hunted and you just lose every single one. Let me go through what makes an IFVG valid, what makes it actually willing, to be traded, and when you should actually, you know, take the IFVG. So let's just break that down real quick. I'm just going to go on NQ here, and I'm going to go to the 15-minute. Right? Let me just go Monday. I'm just going to go through every day this week. So let me just mark them all out. Monday, 9:30. Tuesday, 9:30. Wednesday, 9:30. Thursday, 9:30, and then Friday, which I ended up taking no trades on Friday. But I'm just going to go down per day, break this down, go over what makes them certain ones more valid or less valid or whatever. Holy, the camera's bugging, but it's fine as long as y'all can see the charts. So let's go into Monday here. Let's go down to the 1 minute. It's Wednesday. Here we go. So on Monday, we ripped towards all-time highs, didn't we? Yeah, I mean, failed all-time highs. I guess we did fail all-time highs on Monday. And then we had, what else do we have? This data high here. So let's say you targeted this. Okay, so right off rip on the 1 minute, we just absolutely. Oh, I remember this. Okay, I remember this day. Okay. Mark out this. This is London session low here. Where is it? No, this is London session low. Holy guacamole, that was a terrible price. But let's see if I can find an IFVG here. That makes sense. See, look, honestly, here's an example of kind of a bad one, I would argue, is you have this for value gap right here, and it's holding. And then it gets broken through, like I would never take this. Purely. Wait. Monday was a holiday, wasn't it? But let me talk about this. I wouldn't take this purely because we failed to sweep out all-time highs. So, you had all-time highs above that. And, us being this close to a draw on liquidity, I'm not taking a 1 minute breakage structure to the downside, in my opinion. I would rather see price come up, take this out, and then go through an IFVG, right? And then also one thing to note in this specific scenario, you see how it breaks through it, how it literally fails and then finally breaks through it. That's just ugly to me. I want to see price tap in to, sweep out this liquidity, take and fill orders, and then instantly rip through it. We end up hesitating and then dumping, which is fine. Obviously you can see that played out, but that's not as pretty of, that's not what I'm looking for. When I'm looking for, IFVGs. When I'm looking for an IFVG, I'm looking for it to just get demolished. Right? Let's go here's a good example. If your target was, let's say there was probably 5 minute imbalances in here. If that was your target, and we came down, swept some liquidity, filled, these gaps, took out this low here, filled, a bunch of orders down here. Came down here, filled some orders. And if for some reason you were bullish in this scenario, you got some orders filled, and you have this imbalance, right? Here's the top fair value gap. like in my opinion, you can front run this first one if you want, but I definitely would not have front run this if we came up above it and then closed down here. Not front running that. And if anything, I mark it out like this. So I take that top one here and I mark it out to the bottom of that fair value gap. And as you can see here, we instantly rip through both of those. So this would have been a good entry. And I put my stops at the low. And then I would have targeted, let's just say you targeted here or equilibrium of this imbalance. And as you can see, that played out. Like that, this is an example of a good IFVG. It displaces cleanly, right? Like we're going down, we sweep some liquidity, and it just boom rips through it, and it's going towards whatever your draw is to the upside. I like the way this specific fair value gap, whether I took this trade or not, I'm not 100%. I don't know. Like I'm not breaking down like every single aspect of like what I need to see to enter a trade. I like to see price being in some area to then go higher. Let's say in this scenario, if I was looking for longs. So let's say, you had an hour gap here. And then to the upside, I would like an equally good target. Let's just say this was an hour gap here, right? Just for kicks and giggles. I know I'm on the 1 minute, but let's say this was a 1 hour gap and that had good draws. And then you also maybe had like draws here and then draws like here, right? So like this would be TP1, 2, and 3. You have good draws, You could even, if you wanted to be safer, price break structure on the 1 minute, wait for a retrace, and then wait for a re-break to the upside. So then you would have waited for this one to get broken, which this one plays out, all right? It's a little tighter, but it does end up playing out as well. Like this would have been the same concept if you need more confluence before you enter. But in my opinion, for the most part, with how volatile market has been, I have been taking these setups. Let's say, we came down, there was liquidity resting inside of this, let's say, like on this level. Say that was liquidity, like a higher time frame liquidity, 1 hour, 4 hour, maybe like stacked 15-minute lows. And then, you want to see that IFVG to the upside to then, continue this trend. 1 second, guys. Got a phone call real quick. All right, guys, I'm back. Okay, so like as you see in this scenario, the fair value gap just got touched, right? So this would work for my specific strategy because we swept liquidity, we filled this imbalance. Orders are obviously being shown to be filled with how it's reacting off of. I'm taking this fair value gap. I mean this IFVG. Let's find another one. Let's see here. Okay, so Wednesday or Tuesday now. I faded this, but this was beautiful. So we had, as you know, all-time highs that failed to get taken. So like extra strong draws. I didn't take this trade on Thursday purely because we didn't sweep out this low. But if you go, like we swap out some lows. But as you can see here, guys, this is a great example of a powerful fair value gap. I mean, we just ripped on through it. And this is why I didn't take it. This would have had to been my entry. If this candle here would have closed above it, I would have entered. But this entry up here, I mean, my stops would have been 77 points for this first target. But as you can see, guys, I mean, super printed. But like this is what I mean by like good fair value gap, like IFVGs. Like here's an example of a bad one. Okay, so I'm only showing good ones right now, but let me show you this one more time. So like what makes this one good is I think ES swept this low. NQ didn't. SMT, IFVG, rippage, right? That makes it money. It has reason to go higher, all-time highs, and then, liquidity, good liquidity to the upside, right? So this one checks the marks because it literally didn't hesitate. It just ripped through it. The reason this one would be bad here, this one right here, even though it did rip through it, this is purely because why would you be taking shorts when there's a draw on liquidity this close? Like, I'm not shorting this because the draw is here. I'm going to fade this every single time, and I'm just going to sit back and wait because prices already showed me from honestly this move up that it's going to take out something. And at this point, this high, it hasn't really taken out anything of importance when this is all-time highs resting right above it. And it's also only, let me erase that real quick. It's only how many points? 70 points, even less than that. 50 points away. Like, price is going to take that out, right? Like, if you wanted to wait for this and then wait for another IFVG to the downside, you could have taken this here and then targeted, lower. But I'm not taking this either because at this point we pushed all-time highs. Most of the time after that, you just kind of like chop in place, as you can see here. Like, yes, this is a huge move, but like, look how choppy it was. Literally just chopped its way down. So this is the fair value gap. That's good. Orders were filled, liquidity, imbalance, whatever was filled, whatever you need to then convince yourself that's going to go towards your DOL. DOL was higher. I faded this purely because my stop loss would have been too big. And I like a little bit higher RR. It was like cutting it close. My entry probably would have got filled like here. I'd have to put 82-point stops for, I would have caught a perfect 1-to-1 is what I would have caught. So I just faded it purely because of that reason, but it had what it needed to be for a good, IFVG. Strong displacement through it with a good DOL, right? And just as you trade, you're going to get better at recognizing what makes a DOL good or not. Like, that's just something you gain over time. But this today, this is Wednesday. Oh, this day I actually ended up taking a loss. There was like a 5-minute gap here or something like that. I think it was like this. And price tapped in it, and I wanted here. I wanted like way low. I wanted like here. This was my target, that new week opening gap. And I thought we were just at this point going to just flood the face. And we got the tap in there. And I front run this. The only mistake here, I would argue, is that there was a fair value gap down here. Like, that's why I shouldn't take it. But I was willing to front run it because I was like, we're so bearish. I was like, I think I'm going to enter here, and I think we're just going to flood the face. But another one of my issue is I should have waited until equilibrium of this leg got tapped. Then I would have taken a dub, but took a loss this day. This was the day I lost 800. I took this short right here, stops up here. Target was going to be all the way down here. Like, I was going to go for super banger, but this would have even lost anyways, so is what it is. But as you can see, guys, this was the reason I should have faded this one purely because this one was lower, but I front runned it, and that's just it. Like, there's losses do occur. But if I waited till equilibrium of the 5-minute, and then there was no IFVGs here, but if you just took the break of structure, which as you can see, this huge leg here just dumped the face. So this is, I shouldn't add this in the video, but this is break of structure. It's still showing that the 1 minute is changing its state. And if you were targeting that low, you would have printed perfectly. But guys, this is one of those where it ended up being a loss. Let's go to the day I won now. Okay, let's go to Thursday. This was a beautiful day. Absolutely rip longs here. As soon as this low got taken out, this was a 15-minute low, and it formed an SMT with ES. I remember this, right? SMT was formed here. And honestly, as soon as we this one was an IFVG. This one was a break of structure. I front ran this break of structure right here. And I targeted like around here. and it got smacked. But like as you can see here, guys, like look at the way it just disrespects this IFVG here. Like poof, just blast through. Like even if you took, you could have literally have taken this long after that insane candle, which your stops would have been ginormous, but you still could have caught, you know, monster trades. Like look how, like it's literally gone up since then. I could have been in that one trade forever, basically. But this is what I mean with like good IFVGs. Like another one, look, we come down, fill an imbalance here, right? And then look at the way it just breaks through all these, just rips through them. Long it here, stops here, target a 1 to 2 or whatever your targets are higher, bang, you know. So hopefully this helps. Let me just draw like a little depiction that's not on the chart. Like if this is your IFVG and you have targets here, you don't want to see price hesitate and then break above. In my opinion, I don't like that as much. You can still take it, of course. It's still theoretically a valid IFVG, right? But in my opinion, I would consider this one like a 50% win rate, more of like a gamble. And then I would consider the one where like it taps something really good, has good displacement, break structure. Like this is like a 65 to 70% win rate, just based off of my data, right? This is like one of the biggest things I've changed since like when I wasn't profitable to where I'm profitable now. It was like the biggest thing I was looking for and started noticing was like, bro, when I take the trades that just have more motion in the direction, like my DOL, which obviously, you know, I've gotten better at DOL even to today. Like I get better every single day at recognizing like what's a better DOL, right? Like say this is a really good DOL, which is like literally, honestly, I would say like 70% of your trading is like the DOL. And then it's like, okay, now basically I know basically what I believe is where price wants to go. It's a strong draw. I think it's, you know, part of the play. And then I'm basically looking for a reason to target that, right? So let's say, you know, fill some orders down here. And I want to see price like basically like telling me, hey, we're going up there. You know, like it's not just like, oh, tap, 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 and then barely break. Or like, oh, fail to break, oh, fail to break, oh, fail to break, and then barely taps. No, I want it like taken off. And I'm almost scared in the fact that it's literally going to get there before I can even get an entry. And like, yeah, my stops normally end up being, my stops have gone, like they used to be like real tight stops. But now they've gone to be anywhere from like this 60 to like 80 range are my stops now. Which, yes, price has been more volatile and I've been catching bigger moves. So there's still like 2R, 1.5, 1.8, 3R, 4R trades. But it's just like you just got to adjust your contract size accordingly. You know, be careful with that, of course. But like I like to see motion in the direction. Like that's kind of how I've described it. It's like I like IFVGs and like to enter trades, I need a 1 minute. You know, for 99% of my trades, I need a 1 minute IFVG change of state, right? Now bullish, targeting my bullish DOL, or now bearish, targeting my bearish DOL, or I need a break of structure. And same thing with the break of structure. It's the exact same like thing I'm looking for. I don't want it to hesitate to break and not break and then break. I want it to just rip on through it, right? Disregard it. But the break I don't like as much as I like the IFVG. The IFVG, I make more money. Like I just win more trades. The break of structure, I like more as in like if I'm waiting for a retracement and we break to the downside and then I get like a little break back up after we've already broken main way and then we get the retrace and then we re-break. That's when I like the break of structure better. But that's another video for another time. I'm going to keep it simple here. Just focus on IFVGs. I think this is plenty of information for y'all. Go back test this yourself. Go look at your data. Go look at like what your DLLs were for this week. I want you to, this is your homework. I want you for this week, or last week actually, I want you to go over every single trade you took. And I want you to look at your entry and what you could have done better. You know, Was it your DOL that was issue? Was it the breaking structure, or was it the IFVG, or whatever you enter off of? And just honestly look for motion. Honestly, add that to whatever you're doing for sure. Look to see what price is reacting off of, why it reacted off it. Look into, you should be comparing ES and NQ at the same time. You should be watching both of them. They're, whatever it's called, indices. Like they're similar. I forgot the actual name for it, but be just looking at how it reacted, when it reacted, why it reacted, and then really look into DOL. Like, why did it hit what it hit that day? Why did it target? And then look at what caused it and when the move started, like what the move actually looked like, and try to put that into your brain. And then going forward this week, find you DOLs to the upside and downside, unless like there's really only one that you really want to target, right? And then look into what price has to do in order for you to feel confident into targeting that, and then go down to a lower time frame and find your entry and make sure it has motion. That's what I recommend the most for y'all. Back test this, look into it. I think IFVGs are amazing. I think they're a great tool if used properly, like anything in day trading. And yeah, guys, stay smooth and continue to get better, and the money will come. Y'all have a good one.